when you look at the fundamentals, the technologies that are now deployed in the market, they are really cost competitive today. It's nice to see this sort of innovation from another sector applied in energy. And I think that's sort of what we're looking for always. There is really a demand for carbon-free energy. So there is really, from the demand side, from corporate industrial customers, also private individuals, they want to see more of these technologies being deployed.
Welcome back to Clean Techies, the #1 podcast for climate tech entrepreneurs. I'm Somil.
And I'm Silas. Each week, we publish the secrets to success from investors, founders, operators, and experts in climate tech around the world. Building a startup is hard. Building a climate tech startup is even harder. But we make it a little bit easier.
We put a lot of effort into these shows, so we hope you enjoy. Don't forget to subscribe, leave us a review, and let us know who you think we should have on next.
With that, let's get into today's episode. Hey everyone, quick note for you. You're currently listening to the free preview of this episode. If you'd like the full thing, the full shebang, go over to our Substack. That's cleantechies.substack.com/subscribe and become a paid subscriber. Any paid subscription gets you full access to the show on the Clean Techies Substack.
In this episode, we are joined by Till Stenzel, partner at Set Ventures, a European venture capital firm that has been in operation since 2007, which makes them one of the first climate VCs out there. They invest between 2 and 5 million in rounds that range from 3 to 10 million at the Series A plus stage. Set Ventures focuses on innovative business models and typically like to lead or co-lead their rounds. Their investments range over 6 focus areas: distributed energy systems, digital utilities, AI and enabling technologies, built environment, industrial energy management, and mobility and transport. On a personal note, Till takes us on a fascinating ride throughout his career, from his early inspiration from Amory Lovins and the Rocky Mountain Institute to his venture into renewable energy projects across Northern Africa during the early solar boom. He also then pivoted to E.ON, where he navigated their corporate energy strategy towards renewables. And in the age-old debate of investing in the now of tech, the tech we already have for commercialization versus investing in the future, i.e. the more expensive breakthroughs, Till believes in the now, saying, and I quote, "We don't really need major science and energy breakthroughs to turn our energy system carbon-free." Mind-blowing. I know. Listen to the episode to find out why. He talks about how Europe's regulatory environment is shaping the energy transition, the challenges of scaling EV and grid technologies, and why the future of freight electrification might be closer than we think. Enjoy the episode. All right, Till, welcome to the show. How are you?
Hey, Somil. Hi. Good to see you again. Thanks for having me.
It's been a long time coming. This is going to be a pleasure.
Absolutely.
All right. To start off, we're going to ask our favorite question. If you could have dinner with any clean techie or climate tech OG, which I realized maybe wasn't straightforward, who would it be and why?
Yeah, no, I was thinking about this because actually the OGs for me did play a bit of a role. And the shout out here, or the person I would have thought of, is actually someone who inspired me very early on in going into the sector. So when I was coming out of school, I read a book by Amory Lovins, who is the founder of the Rocky Mountain Institute, and a German professor called Ernst Ulrich von Weizsäcker. And they wrote a book called Factor 4, which is sort of about how we can double our wealth while halving our resource use. And that really inspired me about, an entrepreneurial approach to environmental impact. So, you can be profitable while also having environmental impact. So I'd love to sort of expand on some of the ideas with them if I could.
I'd love to kind of rewind the clock a little bit. What's your story? How did you make your way into climate tech?
Yeah, well, I think I was early inspired in this area. So I actually was one of these people that studied environmental policy and economics before it was more mainstream, I would say. And so for me, going into this field was really something that I was, aspiring to from early on. And then I had a really good opportunity when I did my PhD at Imperial College in London that I met basically an investment banker who was about to launch a new fund in the cleantech 1.0 space. And so that's how I entered that space with Hazel Capital in London, and that's how I got started there.
And I'd love to kind of continue now with that journey. Please tell us about your background. You've had a lot of really cool, and like you said, unique experiences spanning both Clean Tech 1.0 and now whether this is Clean Tech or Climate Tech 2.0. So please Tell us more.
Yeah. I mean, Cleantech 1.0 was really quite a crazy ride in that sense. I started there, just shortly before the financial crisis in 2008, 2009. So we saw the early boom in solar, especially at the time, but then also the bust when really the financial crisis hit. And of course, at that time, renewables weren't yet cost competitive. And then when capital got really expensive, it was really hard to build these very capital intensive technologies. So that was really formative for me. And basically, we got from there into starting our own company. So I founded together with a partner a renewable energy project development company, focusing a lot on solar at the time. So really taking advantage of the price decreases in solar to really then make profitable projects work. So worked a lot in Southern Europe and then also Northern Africa. And that was another very interesting experience. So obviously, where you have a lot of sun and a lot of space available is in the deserts in Northern Africa. And so at the time, that seemed like the obvious place to go. So I spent about 2 years in Tunisia and really that was a really cool time there as well, really being on the ground, doing all the groundwork in a little bit more challenging conditions, but with a country that also was, looking out for new energy sources. So that really gave me a good sort of rounded overview of that market.
Would you categorize that as a successful deployment of solar, or how did that experience go?
Well, I think at the time, I think solar was ready, but I would say at that time I was there right after the Arab Spring started in 2011. So we had, the president fled the country in 2011. There was quite a bit of political upheaval. But at the same time, of course, the country was looking to diversify its energy mix. So I must say, I personally wasn't successful in Tunisia to see the first project go live at the time. At the end of the day, I left Tunisia in 2013 when really I felt we couldn't push further also in terms of local state-owned energy utilities not being too favorable to what we are up to there. But I think by now we do see the impact also in countries like Tunisia and Morocco. So across Northern Africa, we see a lot more of these technologies deployed and at scale as well. So it took more time. So obviously timing is everything in these things. But yeah, I wasn't there to witness it, unfortunately.
So following somewhat of like your tour of duty in Africa, you moved into some really interesting work in corporate strategy. Can you tell us about that?
Yeah, basically, I from that experience, I moved back to Germany and joined E.ON, the large energy utility. I think at one point they were also active in the US, but that they divested, I think, a long time ago. But, it was basically a complete change of scenery, obviously. So before, clean tech fund, startup, being down on the ground in Africa. And now I was there in an office, in a suit, in a German DAX company, so one of the large German corporates. But it gave me a good sort of insight on how these large utilities are planning, how, what lead times and planning cycles these companies go through. And then also, obviously, we had an interesting time at the time splitting up the company. So E.ON at the time divested basically its fossil fuel portfolio, created a new company called Uniper, which was then floated on the stock market and eventually sold. And so that was sort of really the energy transition in action with these utilities companies really figuring out where the value in the future was lying. So that was also a very, very interesting experience for a couple of years. Yeah, but ultimately I figured out I wasn't made for working in a large corporate. I think there was also at the time, there was this clear conflict that, basically E.ON was operating two business models. One was running effectively regulated businesses in the grid space, and then running a renewables portfolio, which was aiming for growth. And so in terms of operating cash flow, there wasn't enough cash going around to service both. So where do you deploy CapEx? Is it in the regulated business or in the growth business? And so, yeah, I also saw a little bit the writing on the wall that something I had to give on that. And I basically left E.ON before then. They had another major transaction with RWE, another German large utility, to then resolve this in another big M&A transaction, basically.
And so escaping sort of the corporate doldrums that you weren't loving, you then went into sort of a burgeoning investing career, I think through a couple sort of different hats. So tell us about that.
Yeah, indeed. I mean, obviously, in the early days with the Cleantech 1.0 experience at Hazel Capital, I certainly had an appetite to go back into this again. But at the same time, I wanted also to see something different and get a bit out of the energy industry. So that's at the time I joined a fund called DTCP, which was seeded by Deutsche Telekom. So it's an investment platform which initially had just one LP. It's by now a multi-LP and multi-strategy investment platform. But this really allowed me to sort of explore also these recent trends in terms of cloudification of services, the IoT boom that was happening at the time, virtualization of networks. So quite a lot of investment themes around there that really showed me the sort of, or gave me an on the ground learning experience on software driven and digital business models. And so I was lucky enough then to manage a fund for DTCP that was investing off Deutsche Telekom's balance sheet. Yeah, and after 4 years, I realized this was really great, but at the end, my heart lay in the energy space and in the sustainability space. So I was looking to really go back into that field, and that's when I joined Set Ventures, where I'm a partner now. So really combining a approach of investing in energy, but with digital business models. So best of both sides. Yeah, so that was really the perfect match for me.
You know that feeling when you meet someone who shares your vision for the future? It just clicks, like two peas in a pod. Well, that's exactly how we felt when we met Goodwin, who we are proud to have as our sponsor. Being the first major law firm to set up a climate-specific startup and venture practice makes them exactly the kind of partner we are excited to work with. They realize that there are a plethora of challenges to building climate tech startups, and that's why they have built an entire suite of resources for founders, investors, and entrepreneurs in the space. They even offer several tailored pricing methods. And guess what? It doesn't matter where you are listening to this. Goodwin is a global law firm that you can trust to be your partner through it all, from incorporation to exit. They've got you covered. Go to goodwinlaw.com and tell them Clean Techie sent you to get exclusive access to startup resources. All right, back to the show.
And you started to get into the story of Set Ventures. So how did Set Ventures come to be?
Yeah, I think so. Set Ventures has an interesting history. They've been around for over 15 years. So really started also in that Cleantech 1.0 time period. And actually their first fund was almost seeded based on money that was reinvested from the proceeds of a deal in the Netherlands to extend the nuclear power plants there. So basically these nuclear power plant operators were allowed to run them for longer, but in return had to invest some of the gains from that into clean energy. And that was what Set Fund 1 was launched to do. It's basically, find that next generation of energy technologies. And then basically the fund platform developed from there. So really, in the first fund, we invested even in a nuclear fusion company before that was becoming a sexy trend as it is today. Did a lot of these sort of hardware intensive investments as well. But then also we had some insights really about how this market would develop. And so really over Fund 2 and Fund 3, we shifted the investment thesis a lot more towards digital business models and basically the energy transition of the energy system overall. And I think, we had some interesting analogies to sort of look back on for that. One is obviously if you look at the internet, in the early days of the internet, it was hardware that was dominating. Take a company like Cisco around the 2000s. They were the company with the largest market cap in the internet space. But then you go forward 10 years, who are the largest companies? It's the software companies. It's the companies with the digital business models, the GAFAs of this world that are dominating. And we saw something similar happening in energy, right? It's not that we don't need more assets, more hardware being deployed. I mean, we're also installing more routers, more hardware equipment in the internet as well. But the real value is now in where, you control, you operate, you optimize this network. And there's a whole digital layer basically that's being built. And that's sort of what we saw for our funds as well, that this is where the energy system is going. And this is where we are positioned now. So we launched our Set Fund 4 last year. It's a 200 million euro fund, and it's basically exclusively dedicated to digital technologies for the future carbon-free energy system.
That's incredible. I'm curious. So when you look at taking advantage of unique business models, how do you think about that in terms of the impact that you hope to have? What is sort of the difference that Set Ventures can create by focusing on really creative business models?
Yeah, I think sort of I would see two aspects here. One is we do see more and more founders that don't necessarily have an energy background coming into this space from different directions. And we think there's a lot of lateral innovation that can be applied in the energy space. So we have a company in our portfolio, it's called Frequenz. The founders previously worked in the advertisement tech space, and they were running a company that was basically able to process billions of data points in very short time to be able to provide the best bids on Google ad banners. So they successfully exited that business and then looked around for the next thing they could apply this insight that they gained from this company. And they basically realized that in the energy space, something similar is happening where now you need, to connect millions of small decentralized energy assets and bid them on the energy market. And so that's the platform they are now building. So it's nice to see this sort of innovation from another sector applied in energy. And I think that's sort of what we're looking for always. And I think that the second part here is really about also sort of where you can go with this and how big you can grow this. I think before, in the old days, you had a very narrow exit funnel in a way, right? I mean, if you had a successful company in the energy space, you wanted to sell it to, the Siemenses, the General Electrics of this world, maybe one of the large utilities or, big oil and gas majors. While nowadays, there is a much wider potential exit funnel around. A lot more different players are looking to be part of the future energy system. And there are less gatekeepers, less incumbents that can hold them back, basically. And so we see a lot more potential there also for these startups to develop into.
Climate tech founders are taking on a huge challenge. Not only do they need to know how to build a startup, but they also need to deal with hardware, have a strong handle on climate policy, know how to fundraise from diverse investor types. It's a lot.
That's why we make Clean Techies, the #1 podcast for climate tech entrepreneurs. In addition to our jobs, we devote 20 hours a week to producing this podcast for you. This way you can learn from the people who have walked the path before you, learn from their mistakes, and gain insights on navigating this complex journey. If this mission resonates with you, we are asking for your help. It takes a lot of effort and it's not free.
If you are already a subscriber and want to help, start supporting us today by going to Substack and clicking Upgrade to Paid. Thanks for helping all the climate tech entrepreneurs like you.
Before you make me want to jump the gun here. That was a super interesting part that we're going to get into. But before we do that, just last to set the scene for our clean techies out there, how does the Set Ventures investing process work? If you're looking to sort of find these unique disruptors that are maybe a little bit more intangible, maybe a little bit more market-based, how are you going about that investing process?
Yeah, well, I think for us, we as a fund position ourselves as a specialist in this field, right? So, we're very narrow in terms of what we're looking at. It's got to have a link to the energy system. So, for example, we don't do carbon markets, we don't do food and agriculture and these sort of things. So there are, we're consciously not doing things so that we can really specialize on and be good in what we do focus on. And so for us, a key part is that we really rely on our network, be it in academia, be it in other funds, be it in the founder space, to identify the trends and then the startups that we want to engage with. And so, I would say, we are very open to meet up and come around as well. So we host regular dinners all over Europe. We have a wide network also from our past portfolios, obviously, of founders that we engage and link up with. Yeah, so we're constantly looking to make that next link and that next introduction here. And at the same time, of course, you need to regularly revisit your thesis on these markets and update your thesis because this is now really becoming a fast changing market. And so that's also part of what we do, that really do the bottom-up research in our space and be really on top of where these things are developing.
I want to talk about innovative business models, right? When we talked at first, we had a couple conversations leading up to this, and you taught me a lot about how to think about innovative business models in climate tech, because there's this existing tension between trying to vest and deploy genuine technological breakthroughs, focusing on the technology that already exists. However, you had a really interesting take about why we should focus on better business models. So I want to ask you, why should we focus on better business models?
Yeah, no, indeed. I think if I try to break this down, I mean, of course, part of it is a very macro sort of question about the VC strategy. What's the type of business model you want to back? And obviously, some VCs are really saying, hey, I want to invest in the next science and engineering breakthrough. Maybe I have a lot of scientists on my team. I can really evaluate that, and that's in principle is fine. I think our view on the energy system is that really there are some really unstoppable drivers that drive this energy transition, and that really provide a nice sort of macro feedback against that, or macro backdrop. And I think the first one is that there is really a demand for carbon-free energy. So there is really, from the demand side, from corporate industrial customers, also private individuals, really they want to see more of these technologies being deployed. So I think that's already something that is different to Cleantech 1.0, which was a lot more regulation and subsidy driven. And I think the second one is then, if you look at the state of maturity of these technologies, our firm belief is we don't really need to have major science and engineering breakthroughs to really turn our energy system carbon free. Of course, there will be incremental innovation. I mean, the solar cells will gain in efficiencies. The wind turbines will capture more wind, have higher capacity, etc. So these things will happen and continue, but this is more incremental innovation happening. And we don't believe that this is really where the next VC opportunity is. We believe it's much more now in this next layer of really what we call the digital layer of the energy system, which brings all of this together. So we are not against deploying more assets. Indeed, we do believe we need to deploy massively more hardware, more assets in the space. However, that alone will not get us there to a carbon-free energy system. There's a lot more required, and that's where the real venture opportunity lies in the end.
When I first heard this, it felt somewhat contrarian, right? I mean, if you think about it, I think one of the things Silas, who's the co-host of the show, and I go on about is one of the most successful versions of a climate tech company is a genuine novel breakthrough executed well, right? Brought to market well and then scaled up and commercialized. That again requires sort of that novel breakthrough. And I think there's sort of a camp of people that do fall into okay, we're looking and scouting for those sort of, major new efficiencies. From other investors and maybe even founders in the community, what's the kind of pushback that you get, and where do you find the unique tensions usually coming from?
Yeah, yeah. Look, don't get me wrong. I do admire those scientists and founders that really go for these hard to solve problems in the science and engineering space. That's there's a different level between having respect for this and where do you base your business on, right? I think if you look at it, first of all, we as a fund obviously have to say, hey, we've also invested in these technologies, right? I mean, as I said, we are invested in a company called General Fusion. And of course, if they are ultimately successful and they are really on a good path, that will change a lot. If fusion really becomes a commercial option, probably a lot of the sort of models and analysis of what will be in the future energy system will have to be rewritten. However, we don't believe this is something that's around the corner today, and we don't want to wait as well. And I think if you break down ultimately the sort of value pools in the energy system, we think about it as follows. I mean, think about the renewable space as it is now. Just with incremental innovation, we think the cost of the marginal cost of energy production has a good potential to come down another 50% or so in the coming year. So just based, on core technologies like solar, wind, hydro, coupled with some others, that's probably in itself. But of course, that in itself will not be enough. As we all know, these technologies produce energy maybe when we don't need it, and you need to balance this, and that is fully accepted. But that cost reduction of 50% basically creates the wallet with which you can pay for, effectively, let's call it the flexibility in the market to integrate all of that. And that wallet, that 50% of, doing the other stuff that is needed, that is the venture opportunity. Because today, if you look in terms of absolute market size, that is virtually not existing. This is just at the early innings of being existent, but it will ramp up massively. And, if you think about overall energy costs, maybe broadly staying stable or maybe slightly lower than today, then when you then break it down, the composition of that will be very different. Today, it's all energy. In the future, it may be 50% energy and 50% flexibility, whatever else there's needed. And we want to have a wallet or a share of that other 50%.
So it's somewhat seeing, I think we see this in the US, it's seeing sort of there's more energy coming onto the grid, there's more energy being generated, that the market is getting there, right? And those investments have been made. Now it's about managing all of that coming on in the right way. And there's sort of a need for market solutions to do that. I remember in our conversation, part of it was you were telling me how the way you can measure a grid's performance is it doing too much, right? Like, is it taking on too much at a single point in time? That means it can be allocated a little better. And on that point, you mentioned something really interesting in the EV space that you were seeing some companies do. So I want to ask you, about that innovative business model that you saw in OEMs do with EVs.
Yeah, I think this is a good example. And I mean, and this is also where exactly some of the innovation lies, right? Because I mean, we are all these nerdy, really technical dudes that, come from this energy view and say, hey, there's so much that you can do with these and these technologies. And, the energy system could be so much more efficiently run. But then you talk to the end customer, and for them, energy is just a means to an end. They're like, what? Like, why should I care, right? And so part of the challenge with these innovative business models is that you want to provide the customer a seamless, high standard customer experience while tapping into some of these untapped value pools that are sitting there in the energy system. And that is a challenge because you need to effectively educate your customers. You maybe need to even create a bit of a shift in the way you operate your own assets and gadgets. And I think EVs are a good case in point. I mean, effectively, if you look at an electric vehicle, it's a big battery on wheels. Yeah, that is how I, with an energy lens, would look at it, right? I mean, yes, it gives you some comfort to drive, but effectively, this is an asset that could be monetized, right? And the nice thing is that we know that 23 out of 24 hours in a day, a car is typically parked somewhere, right? Statistically speaking, cars are only used 1 hour a day. So now the challenge is how can I activate all of these batteries for the energy system? Because effectively, there's a big trade-off. Maybe I don't even have to invest in the grid anymore for upgrades. Maybe I don't even have to build new power plants if I can tap those batteries and by that time shift a lot of the production that is happening anyway now. So the innovation here is not in some science and engineering breakthrough, right? Technologically speaking, all of that is possible to tap a battery, store energy in it, and then discharge it again when it's required. But what is not happening today is market signals reaching customers in a way that they say, hey, yeah, I'm willing to do this. And that's where we see some interesting business models springing up. So we've seen car OEMs in Germany now experimenting, for example, with different leasing rates, right? So if you lease a car, they will basically tell you, okay, option A is it's your base rate. You can do with the car whatever you want, but it will cost you X. But option B is, hey, we provide you with a wall box that is capable of bidirectional electricity flows, so charging and discharging. And we put you on a tariff and a home energy controller that will basically activate your car whenever you are at home parked and plugged in so that we can make use of the battery on the energy markets. But by allowing us to do this, you will pay a lower rate for your car. So I mean, you can turn it in different ways, be it that you have a lower leasing rate, be it that you earn income basically from owning a car. But the bottom line for the customer is suddenly you care. Suddenly you care about these energy market dynamics because it's good money for you, right? And with an 80 kilowatt hour battery of some of these SUVs in the electric vehicle space now, there's a lot of energy per month that you can trade on, and that could be a good piece of income that you can earn on the side there. Imagine you go on a business trip for a week and you just tell your home energy system, this is my EV. I'm back in a week from now. Now basically go wild on the market, right? Go wild, earn me some money, and only make sure that on Monday morning, 8 a.m., when I'm going back to work, I have a full battery to drive off again. Off you go.
I want to ask a bit of a technical question. Something that I've come across in sort of asset-light, innovative business models is that there's a big difficulty in risk modeling, right? You said, a lot of people in clean tech come from sort of this, energy nerd, super smart background, but oftentimes it's not in finance, nor is in financial modeling. And I think one of the nuances of navigating hardware in climate tech is that there's risk, especially with batteries, they wear and tear. So I wonder if you could offer any guidance to us when you're trying to do somewhat of an asset light model or using hardware and leasing it out. Oftentimes you have to take into account the damage and the risk. So are there any blind spots that you're seeing founders come across when doing things like that? And how do you recommend overcoming it?
Yeah. No, I mean, you hit on a good point there because indeed, of course, when you peel the onion here, several layers of risk need to be considered. And not everyone has this full stack know-how yet. And we see almost a learning curve at all levels. I mean, insurance companies, they start to learn now, what is the wear and tear of batteries, what is the risk of significant damage happening, etc. And there isn't enough data really going around yet to have fully informed views. Then comes the bank. They need to understand if we finance this, what's the level of projects failing, of assets being returned, etc. If they can't insure it, then they have to price that in as well. So there's a whole layer of support industries around it. You could argue this is again a business opportunity because now you can almost develop these sort of data-driven products for these several layers in the value chain. But there, of course, there isn't yet an integrator. The car OEMs are experimenting with it, but it's not yet a mass market product. So this is, again, a question of timing, a question of really bringing together these different layers of know-how so that you can then really have a seamless product and seamless customer experience. So definitely an issue here. And I think also what we're seeing, of course, is it's not a linear market curve, right? It's not like EVs are just constantly growing 50% year on year and don't stop. I mean, they are growing, but for example, in Germany this year, we have a decrease in new EVs being brought to the market. So there are also detours in the market. There are, changes in regulation. And so it's still a tough market to navigate.
I want to pivot a little bit. One of the things we love to ask about, especially in 2024, but also, the perspective of the next couple of months, is political landscapes across the world. 2024 was sort of a notorious year globally for how much was going to change. And Europe is a place where, things have, I would say trended in a similar direction. Although you could probably tell me a lot more than I'm saying right now. So I want to ask you, how do you believe sort of the shift to the right in recent years in Europe is affecting the clean tech ecosystem?
Yeah, I mean, of course, European regulation has been relatively accommodating for clean technologies and renewables in particular in the last years. We had this Green Deal in Europe. We had several measures at the EU level to support this. And so obviously that has been a good push. And now we're entering a phase where I think this is now becoming probably also more regionally differentiated, right? So overall in Europe, at the end of the day, we always have to navigate individual markets. The European Union lays out some sort of broad frameworks, but then underneath that, of course, there's country by country specific regulation. And I think so that is definitely one that also founders need to watch out for. How does your business model, your market depend on specific pieces of regulation or even public funding? And certainly if you have over, a high level of individual country risk, that's something that I, as an investor, would look very critically on. I think, on the other hand, what I would see positively is, overall, we still see the energy transition as a sort of unstoppable trend. When you look at the fundamentals, the technologies that are now deployed in the market, they are not so much just relying on subsidies or any specific regulation anymore. They are really cost competitive today. And as we discussed, it's probably in many instances more a question of how they get integrated into the market rather than is it feasible or not. So I think, even with political landscape shifting again, and let's see what happens in the US now, but I think there's some fundamental driver in place that really makes this energy transition really unstoppable.
Do you think that it's sort of an underlying history of the space that's kind of gotten everyone on the same page? I mean, compared to the US, Europe is coming at it from, we've deployed a lot more legislation and regulation. Is it now sort of a societal factor? Maybe it's just too much work to kind of pull it back all the way. I'm wondering how sort of like there being legacy policy is affecting what you're describing this potentially some of the stability that we might be seeing. Thanks so much for listening thus far. If you want to hear the rest of the episode and all of the cool things that Till has to say, go to cleantechies.substack.com and upgrade to paid. There you'll get access to not only this episode, but the rest of our full episodes on the Substack. In addition, you'll also hear some great content from Silas and I each month. Subscribe.